Alright, lesson 3, episode 3, market direction. It's an important thing to know. It's very important for beginners to learn this early on. It's a very important part of the market, and you have to know how to identify market direction and develop a bias and market structure by just looking at the chart. In a couple of seconds, you can see what way the market is going and what you should be doing based off that. So, what actually is market direction? It just shows you which way the market is going recently. So, if you got more buyers than sellers, you're going to be in an uptrend. If you got more sellers than buyers, you're going to be in a downtrend. If the market is indecisive and it's kind of bouncing in between 2 points, you're going to have a range, right? So basically, this is an uptrend, and what an uptrend will do is it'll make a high point, it'll make another lower point, but it won't break this low. It'll just make a high, then it'll make a higher low, they're called. It'll break up to make a higher high. It'll have a pullback to a lower high or a higher low, and it will come up to a higher high, and so on, right? And then it's basically the opposite for a downtrend. You'll have a move down, you'll make a lower low, then you'll come up for a pullback, make a lower high, come down, lower low, lower high, so on, right? And then the third and final main market direction, market structure is a range. So what you have here is when price makes a low point, makes a high point, and then it just bounces off these points, right? It can consolidate, or this is also called consolidation, accumulation, whatever. It can do whatever it wants up here, right? And it can make an uptrend in this here. This can be a downtrend in a lower time frame, right? And it's just bouncing between this high point here and this low point here. And the reason it's not perfect, these things are imperfect, is because they're never going to be perfect on the actual chart. You're never going to see a perfect uptrend or a perfect downtrend or a perfect range. They're always going to be a bit like messy, right? And you just have to work with that. So something interesting actually about ranges and uptrend, something interesting about market direction, they and the importance of time frames, right, is in an uptrend, say on the 1 hour, you can see, okay, it's an uptrend, right? But if you were to go down on the 5-minute chart, you could see maybe on this pullback here, this little pullback, right? On the 1 hour, it's an uptrend, but on the 5-minute, if you were to go in here, it would actually be a downtrend. So this kind of template will be inside of one of these pullbacks, and then you would have an uptrend, then you would have a downtrend, and you would have an uptrend and a downtrend on the lower time frames. So it's kind of how time frames work. It's the importance of time frames. Basically, you have to check out a lot of time frames to see the actual movement of the market. You got to check out your market direction on a higher time frame, like the 1 hour or the 4 hour or even the daily, because if you're on the 1 minute or the 5 minute or the 15 minute, you're going to think, oh, it's in a downtrend, when in reality, if you zoomed out a bit, it's going to be in an uptrend, and vice versa, right? So for example, what we have here, you could probably spot it already, is a downtrend. So we're breaking the lows when making lower highs, lower low, lower high, lower low, lower high, lower low, lower high, and so on until it hits a low point and then makes a range, right? So of course it's not perfect. It doesn't look exactly like this, right? It doesn't look exactly like a downtrend, right, that I have laid out here, but it is obviously a downtrend. So if you're on the 1 hour time frame and you want to take a trade, you're not going to take a long position unless if you're a beginner, you only want to trade with market direction. That's why it's so important, is you only want to trade with market direction if you're a beginner. So if it's in a downtrend, you want to only take short positions. You want to only take sell side trades. And in an uptrend, you only want to take you only want to take long positions. You only want to take buy side positions. So again, as you can see, may say higher low, higher high, higher low, higher high, higher low, and what I can anticipate euro yen doing next is going up here, right? So down around this area, or around this area, judging by the way it's been doing shit and the way uptrends work, you could be looking for a buy position around here, right? Because that would be with the trend, and that would be a reasonable thing to do. So there's an uptrend and a downtrend in the market right now, and there's one more thing, the range, which I have over here somewhere. Let me find it real quick. Right, here's a range. So as I said, it makes a low point and a high point, and then it just kind of bounces along this. Now it's not perfect, but you can see there's no uptrend in this. There's no downtrend. There's no kind of, you know, it's not really going up or down. There's no uptrend. There's no downtrend. It's just going, you know, sideways pretty much. And eventually it'll break out of this and move on with an uptrend probably, or a downtrend, or it might fall out and make a downtrend. But those are the three constant market directions that the market is always going to be in. There's no other way for it to go, right? You can't, so they're going up, down, or sideways, and you have to know which one it is. So, as I said, a few tips for identifying the market direction and knowing which way the market is going is, instead of being, say, on the 15-minute, you know, you could say, oh, it's a really big uptrend, right? We're in an uptrend, we need to take buy positions. Or if you're on the 5-minute chart, or I don't know, you're on the 1-minute chart or something, right? You go to the 1-minute chart and you say, oh, well, it's actually a downtrend right here. See? Wait, I can't even zoom in. But you can see here, if you're on a 1-minute, you can see, oh, it's a downtrend. But if you zoom out to, you know, a bigger time frame, like the 5-minute, you're going to see it. Hold on. You're going to see this as an uptrend. But if you zoom out to the 1 hour, you're going to see that all it is a range. Right? So that's the importance of time frames and kind of using them to develop your market bias. So basically, what's the point of knowing this? It's that if you're in an uptrend, you want to only take buys. If you're in a downtrend, you want to only take sells. If you're in a range, you can take either side if you want. You can just short the top and buy the bottom if you want. So that's why you need to know, because a lot of people lose money just because they don't know how to identify the trend or the market direction, right? So that's pretty much all you need to know. There's no need to go deeper into it. Just use your time frames accordingly and only trade with the trend. I can't stress that anymore. Trade with the trend. All right.